Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menasce. This is the weekend edition where we interview notable people from the world of real estate investing. Today is no exception. We have a great guest all the way from Westchester, New York. Welcome to the show, Anthony Scavo.
Thanks, Victor. Thanks for having me on again. It was a pleasure last time. It's going to be better today.
Great to have you here again. You are emerging as a major player in the world of small bay light industrial, and love what you're doing. You've got some great strategies that you're implementing on a nationwide basis, and I know there's a lot that's happening in the market, which is why we really want to have you on the show to get a bit of an update. But maybe before we do, perhaps give a little bit of your backstory and how you got to this point in your journey for the folks who haven't met you yet.
Yeah, I'll explain because we talked about it last time on the show, but I started working full-time when I was 17, going to college I went to NYU Stern. I grew up in Brooklyn. My dad worked for one of the largest family-owned real estate companies in the country. I went to work there part-time during college, and I ended up working there full-time. So I spent 25 to 26 years there, first and only job for a long time. And then after that, I went to another family-owned large real estate company for about 2 years. And then I came here to Basis, where I went from, working for a place where money wasn't really ever worried about because the families had it themselves, to a place we had to raise your own equity, worry about the bottom line, P&L. So it's a little different, a little more entrepreneurial. But the experience I got there is unreplaceable, working with people of like that stature and that fortitude in the business that the people I grew up working with had, right? It really is irreplaceable. I think it's an amazing, I don't know, a lot of people that I meet today had that kind of both upbringing and tutelage at the same time. It was basically you learned from people who've done it for a very long time and did it a certain way before it was modernized, right? So you learned how to the ins and outs and the nuts and bolts of it, actually building, developing, how to get things done on time, how to get things done on budget. So that's how I started. And now we're at Basis, a company that we really just started buying product, call it in mid-22. And 4 years later, we have over 10 million square feet of product and 65 employees. We went from 3 to 65. So it's been a pretty impressive growth trajectory in a market that isn't best to do growth, right?
Absolutely. And you did that in a time of rising interest rates when there were a lot of headwinds in the market, and also in an arena where there is not a lot of small bay being built in the country at all. So you are essentially doing a value add play on existing product, maybe some of it from mom and pop owners, some of it from institutions that are looking to maybe divest of portfolios. What are you seeing in the marketplace right now that is maybe different from, say, even a year ago?
I think the deal flow has definitely increased from last year. And I think that's because people have realized that interest rates are going to be where they are, right? They're stabilized, if you will. So they're not worried about them going up or down. They just think they're going to be flat for a while. So people have come to that reality like, okay, I might not be able to sell for a 4 cap. I might have to sell for a 6 cap. I might have to sell for a 5.5 cap. And I'm still going to do pretty well. I might not do as well as some of my projections, but my fund's coming to an end. Interest, my debt that I borrowed at a very low interest rate is going to come due, and I'm not really in the mood to refinance it at a higher rate. So I think a lot of those people are exiting. And I also think you have a lot of the very large, not to use names, but some of the largest in the world, right, owners of real estate, seeing that the small bay industrial product they have is something they can sell now, make money on, and return money to their investors, what they have to do, right? So I think that's why some of the larger institutions that don't have a closed-end fund are selling, because it's something they can sell right now and get a very good cap rate on, a very good profit on. Because when they bought it was much cheaper per pound and per basis, right? So you have that going on right now. We didn't have that last year. I do think there is still uncertainty in the market, but it seems like the market just digests it like it's nothing. Like I think that has to do with the government we have in place right now and the issues in the world. It just everyone's used to things being bumpy and they're absorbing it. And I think money's flooding back to real estate, maybe not as a huge way, but being that the vintage, call it 20, 21, 22 stuff is doing great and money's still coming in, I think it's very impressive, right? And that's not doing right because of systemic things. It's more because of leverage and debt, right? Debt was much cheaper, people paying more, and you didn't grow as much as you could in that time frame as you did previously. So real estate's still a real asset that retains value. Inflation is high, which is bad for the normal person, but it's good for real estate, right? It makes the value go up because it's irreplaceable stuff, right?
Absolutely. Yeah. So, what you highlighted there are really two cycles. One is these funds that has nothing to do with the property. They're at the life of the fund, and they've got to return capital, and so they need to divest. That has nothing to do with the underlying business, and so it's simply driving a wave of divestiture, and that layered with debt maturing. If it's on a 5, 7, 10-year cycle, that debt maturing is also triggering some liquidation.
And that's why you see some of these massive recapitalizations that are going on, because people are realizing that if they can't sell for their predicted cap rate, they probably can recap lower than they could sell for. So they'd rather do that where they keep the property and hold some of the upside for later. So that's going on a lot too in our industry, which I don't know about you, Victor. You've been around a long time too. I don't remember anyone ever recapping hundreds of millions of dollars in small bay industrial. I don't even know, they don't even know what that was called back then, but people are doing it. I think the other thing that we should point out, which is a little abnormal, a lot of the bigger funds, like, the big names everyone knows that own, hundreds of millions of square feet, they're selling this stuff too right now because they can, because they also need to give distributions to their investors as well. And a lot of the stuff that they bought previously, like multifamily, hotel, they can't sell right now because it's not a good market to sell in. So, I think our industry is getting a benefit of deal flow from those multiple factors we're discussing, right? And you always got the mom and pop, like you brought up. You always got someone who's, they're getting older, they want to retire, they just want to sell because they don't want to own it anymore. That happens all the time. And we still get some of those. Less true mom and pops, more like smaller GP, like with LPs that just, they made their basis. They bought at 100, they want to sell at 140, they're done. Like that. And we get some of those once in a while. Those are harder to manage and a little bit more messy, but we do get them.
When you look at the demand for small bay, historically it was the traditional independent contractors, plumbers, electricians, landscaping companies. Today, the demand is much broader. You've got everything from CrossFit gyms to pickleball courts and all kinds of different, even some last mile logistics or some e-commerce businesses. And then even folks that may have been in office at $30, $40 a square foot that would rather be repurpose that space at $10 to $15 a square foot and put their office there. There's all these different demands, and the fact that there's no or next to no new supply coming into the market is creating a lot of upward pressure.
Yep, it's absolutely true. I'll give you the flip side of that too, Victor. We actually lost a large tenant to an office building.
Interesting.
Because they were mostly office. They were probably 90% office, 10% warehouse, and their rent was about, call it, I'm not going to give exact numbers, but like 28 gross.
Okay.
And we were doing, a full service gross lease for them, which was abnormal for us, but we do have some tenants like that. And because the market we were in, there were some offices that lost tenants. There was some sublease out there where they get it for 20, 21 full service gross. And we couldn't match that because, listen, we're not marking down rents that much. And they went to an office building, you can't, that's happening too in the reverse way, right? So you have people who want to have single story product that need a little bit of warehouse, a little bit of drive-up access that of course will do better than office building. But if someone can always go to an office building in certain markets, they'll beat your rent because that's where small bay is going. But we have tenants from cheerleading schools to beef jerky manufacturers, to baseball training schools, to golf simulators, to barbershops, rap studios, everything that you could think of is in our space. And listen, some of them have a little bit. The good thing about a lot of our space, there is a client-facing office that they could have. So they can always bring a client in to look at stuff. Some of the properties we have less of that, some of them have more. But we found that the stuff that's more built out office, paradoxically to what institutional people think, usually stays rented longer for higher rates and a little bit more better clientele, just because they have more of their C-suite in with them in the manufacturing and in the back office. So they treat the space nice and they're in it. And it's usually because they don't want to drive as far to get to another place, right?
Yeah.
So you got that kind of close transportation thing that helps you out. So we have a lot of that too. But yeah, it's a very interesting dynamic that's changed. I remember when we were younger, like the people that would be there would just be an electrician or an air conditioning guy. That's all that would be there. And they would have a warehouse door, a van door that they would lock up, and they would pull their truck in at night, close the rope, walk out the man door, and that'd be their space.
Exactly. Now, do you see an interplay between small bay and IOS, industrial outdoor storage, where there's a complement between those two products?
Yeah, if you want to laugh, speaking of that, I just saw the first deal marketed together, like with an iOS section portfolio with the small bay with it. Listen, if you could build a buy, call it 10 5 to 7,500 square foot buildings with an acre lot on each, you're talking about, you've never seen rents that high in Small Bay. Like if you could rent that to a full, like call it turnkey solution, it'd be amazing to have that, right? But that's hard to get permitted and hard to get approved in areas. But that would be the best solution if you could give them that, because everyone wants that. So what we do is we'll tell them if we're underparked at a site, they could use their trucks in certain areas where we have the overparking. But if not, we have to limit their parking, and that kind of hurts them sometimes. But that's why a lot of the sites we have are pretty congested.
Well, right. And the feature of industrial outdoor storage, of course, is that it's secured. You've got cameras, you've got power, you've got all these other things. You've got turning radius that would be necessary for that client. And it's a covered land play. So if you want to then later develop that down the road, you're at least covering the income and generating a profit off of that land without a huge investment.
I agree fully. And the other thing is too, like, people really need that today because they don't want the employees taking the trucks home. The insurance is too much used and things like that. So they want a place where they can park everything, keep it safe, keep it secure. They have valuable stuff inside of these trucks and equipment, and it's got to be saved up. And we get it. Just that iOS is just wasn't our always business, but we don't mind buying it with other Small Bay.
Absolutely. So how do you get your deal flow? Are you just known in the market today and it's just coming to you at this point? What's the source?
Yeah, so we have a group of acquisition folks that work with us that call people, get into these markets, get to know the brokers, get to know the local, all the little brokers that are looking to become a big broker, right? They bring us some deals. We pay them our side on that for an off-market deal. A lot of sellers know us now, so they're repeat sellers to us. And then, of course, we probably buy 30 to 40% marketed and then the rest unmarketed deals. So a lot of them are off-market or unmarketed or slightly marketed. Like when I say slightly marketed, like a small broker brought it out to like 20 people, like that's not institutional. But if something is fully marketed the right way, I think we were 38 out of 40 bidders on one of the deals in South Florida, like with that many. So there's a lot of deals out there like that are getting bid up, but it's getting harder to go to an institution and try to buy something off market from them because they're seeing that too. They're saying, listen, if we put this out there, we're getting above ask, getting above guidance, getting a lot of offers. So you really bet out the market, right? But then you get a deal that's truly Small Bay. Like we got one in Hialeah off a very large seller, 42 buildings, 200 tenants. And we were like probably one of the only 2 or 3 bidders because it was too difficult to manage, right? So we do have that advantage in some of the stuff. But if it's a really marketed deal in a really hot market, you're not going to be able to compete unless you overpay, which we don't do.
Yeah, you never want to be the winning bidder in one of those giant auctions.
No.
Because did you win? I don't know. Not really.
I think a lot of, there's a lot of the bigger funds have like longer term money.
Yeah.
So they're looking at it like in a 10, 15 year period, and we're looking at a 4 to 6 year period. So it's a lot different. It is. So I'm not defending them, but I get the point. If your goal is to buy only in really high barrier to entry, high value markets, and you have that kind of timeline, listen, it might work, right? But I don't want to be that guy. No, I don't want to set records.
Absolutely. Absolutely. Well, Anthony, great update. If folks want to connect, if they want to learn more, what's the best way?
Anthony at baseindustrial.com. Same as last time. Nothing changes.
Awesome.
We're marching on, Victor.
Terrific. Well, Anthony, great to catch up. And for the listeners at home, definitely want to connect with Anthony Scavo at Basis Industrial. The link will be in the show notes. And in the meantime, have an awesome rest of your weekend. Go make some great things happen. We'll talk to you again tomorrow.